So this is a talk about all of the personal finance questions that Bitcoiners are afraid to ask. And so obviously the first one is, are the conference tickets a scam? I'm just kidding. No, that's too controversial. We'll talk about some real things. So the number one question I always get from Bitcoiners, no matter where I am, as soon as they find out what I do, the first thing they ask me is, how much Bitcoin should I own? And the first thing I always say, well, it depends. And it does depend on your situation. And so I think that because in the personal finance world, in the traditional personal finance world, there's so many rules of thumb about what you should and shouldn't do with your finances. And obviously, we are all hoping that we live in a Bitcoin world. And in that Bitcoin world, we're not thinking about a 60% stock allocation and a 40% bond allocation. And in fact, I think those rules of thumb are sort of dead, right? And maybe need to be thrown out the window. But there is no exact rule of thumb, really, for a Bitcoin allocation. And so what people really need to be thinking about is whether or not they're over-allocated, under-allocated, or appropriately allocated. And there are a number of things that go into doing that. So the first thing is actually evaluating your risk tolerance. So risk tolerance is a combination of your willingness to take risk and your ability to take risk. Willingness is exactly what it sounds like. Willingness is like, hey, I love skydiving. I'm ready to jump out of this plane. I love when my portfolio goes up 200 million% and then drops down to 0%. I don't mind that at all, right? That's willingness. And most people actually base their risk tolerance on their willingness to take risk. And usually willingness does win out, really, because of that. But ability is actually just as important. And your ability to take risk is based on literally what your situation is. So do you get paid regularly? Is your income stable? Have you been involved in financial markets for a long time and you have a good understanding of what you're investing in? Are you worried about losing your job anytime soon? Do you have a lot of assets or a little bit of assets, right? Somebody who has a lot of assets has much more ability to take risks, because if they were to allocate, let's say they're worth $1 billion, right? If they were to allocate 100 million to Bitcoin, it's not going to be the end of the world if it goes to zero. Whereas if somebody only has $10,000 to their name and they put all $10,000 in it, right? Now you might have an issue if Bitcoin goes down 85%. So these are all things to consider when you're thinking about allocating to Bitcoin. And then from there, once you've assessed your risk tolerance, then you actually have to evaluate your personal situation. So for most people, what I like to say is, and people hate to hear this, especially at Bitcoin conferences, is you actually have to have a fiat emergency fund. And so your fiat emergency fund should be somewhere between 2 and 3 months at least of, real fixed necessary expenses. For a lot of my clients, we actually do somewhere between 3 and 6 months. That way they have a good stretch of time where they're not going to have to worry about liquidating assets. They can actually just dip into cash. And then you'll be able to withstand any volatility in your portfolio. If from there you have a high risk tolerance, you have high ability to take risk, high willingness to take risk, then I'm all for you being 100% Bitcoin outside of your emergency fund. I know that's sort of crazy to hear from a traditional financial planner, but if you've got that emergency fund intact and you can withstand things, because if God forbid you got sick or something happened or your car broke down or something unexpected, you lose your job, somebody in your family hopefully does, get sick or something like that. Hopefully that doesn't happen, right? But you have the funds to cover that, and now you're not selling your stack in order to make your ends meet, right? So we always want to make sure that we're protected there, and then from there you can allocate to Bitcoin. What I've seen in my practice, though, is that for most people who have a really good understanding of the technology and who have a relatively high risk tolerance, the right allocation is probably somewhere between 30 and 50%. And the reason why we come around to that is because there are going to be other things that are going to go on in your life that aren't necessarily an emergency, but will take place between 0 and 5 years from now. And it'll be something that you'll want to use your funds for. So a good example of this is, let's say, a positive example would be, I want to go start a business, right? If you want to go start a business and you're 100% in Bitcoin, and we're currently living in this fiat world, right, where you actually need to spend your fiat in order to start a business, then being 100% Bitcoin is not right for your situation, right? Because you would have to sell. And let's say you wanted to start that business when Bitcoin came down from 70K to 16K, and now, you allocated at 60K, and now you're basically selling your stack at a loss to start this business, right? You don't want to be in that situation. So there are positive reasons why you might want to have money outside of Bitcoin that's in fiat. So what we like to do in my practice is something called asset liability matching. It's a really fancy term for matching your short-term expenses with a short-term asset and matching your long-term expenses with a long-term asset. And so to me, Bitcoin is savings, but it's long-term savings, right? And I think everyone here can agree that like we are hoping for a Bitcoin world where there's a Bitcoin standard, where we eventually will not ever have to convert back to fiat. That's the whole reason why we're all here. We're all here meeting each other and trying to do things in Bitcoin. But unfortunately, that's not the reality that we live in now, right? The reality we live in right now is the fiat clown world thing that we're all experiencing, right? So unfortunately, because of that, we do have to keep some fiat around. And so my best hope for you guys, though, is that you keep some around and that you're able to start that business. You're able to maybe take that trip around the world that you always wanted to do. You're able to retire comfortably. You're able to fund your kids' education or stay at home with your kids, right? That's always a big deal for people, is like whether or not they want to go out to work or they need to stay in the house or what they want to do, right? And all that stuff, your allocation really depends on that. And so that's why we kind of like to settle in that 30 to 50% range. But if you're just starting out, that's definitely too high. So that's why I'm giving you all these brackets here, right? So for like the hardcore Bitcoiner who's got that emergency fund, they're going to be 100%. They don't have any other goals other than Bitcoin. Great. If you're not there, if you're somewhere in the middle where you've got some expenses or some things that you want to do in the next 1 to 5 years, I would say, and you're also a hardcore Bitcoiner, you understand the technology, you've been around it for a while, that 30 to 50% range is going to be appropriate for you. If you are just starting out and you're still learning about this and you're going down the rabbit hole and you're not quite sure about it, then actually starting positions really should be somewhere between 1 and 10%. And so in my practice, we have every range of clients. We have the clients who are the hardcore Bitcoiners who've got that 100% allocation, and we've got people who are newer to this who we allocate 3%, right? And that's okay. And I think that when we come to these conferences, we hear a lot of macro expectations and we hear a lot of doom and gloom about what's going on in the world. And because we hear that over and over again, we feel like there's this big rush to take all of our fiat and just throw it into Bitcoin as soon as we can and escape this fiat reality. And I'm with you. Like, I'm not immune to that as well. I've got 3 kids at home. Like, I want to make sure that they have the best possible future. My best hope is that we are living in that Bitcoin world, but unfortunately, right now, we're not. So I've got a question in the back. Keep going. Okay, great. And so I'm going to, I guess, recap here. So if you're just starting out, 3 to 10%. I mean, 1% is fine, but like I really kind of like 3% as a starting position. If you're a hardcore Bitcoiner, but you've got things on the horizon, somewhere between 30 and 50 is great. And if you don't care about anything other than Bitcoin, you don't have anything going on for you, then I would say that 100% allocation is going to be okay. I would say for most people, you probably don't want to be over here in that 100% allocation, right? That means that like, what are you doing this for? Right? We're here on this earth to make the world a better place, to have a family, to find our place in this world, to be spiritual, to be creative, right? We have all sorts of goals, and to be a big part of our communities. And if we're just 100% focused on Bitcoin all the time, we can't do all of those other things. And I think that it's okay to not be 100% focused on Bitcoin all the time. And I'm giving you permission. As I stand here on stage, you don't have to be in this bucket. Be in the middle. It's going to be okay. And I think if we all have these crazy price expectations for Bitcoin, which will probably pan out, and I don't know when they're going to pan out, but like, I do think at some point, right, Bitcoin is going to be worth millions and millions of dollars a coin. And I'm sure everybody here in the audience feels the same way. And if that's actually the case, then a 30 to 50% allocation is going to get you there, right? You don't have to be 100% to feel good about your personal finance situation in the future. All right, so next on my list that I often get a lot is, should I work in Bitcoin? And so I think what happens is that we get really wrapped up in what's going on in this Bitcoin world, and we think, well, the only way that we can make a difference is if we join Bitcoin rather than doing this, our clown world fiat job instead. And so I would actually evaluate, okay, I've got 5 minutes. Wow, that went really fast. I can't do anything in 15 minutes. I don't know how they expected me to do this. So I would say if you're thinking about working in Bitcoin, you need to really decide whether or not it's worth it to you to give up the job that you're currently at and maybe a potentially really good stream of income that you could save in Bitcoin and maybe retire earlier to trade that off for a Bitcoin job. There are a lot of people who want to work in Bitcoin. It's, I would say, probably very, very competitive at this point, and especially with the job market that we're in, that potentially it makes more sense to just stay in your fiat job and be stacking as you go. You could still be a part of Bitcoin. You could still come to events like this and meet lots of Bitcoiners, and it's okay to not work for, you know, every major Bitcoin name out there. As long as you are saving appropriately in Bitcoin and you're, you know, using those bars of allocation, you're going to be okay. I'm going to keep going, though, onto the next topic, because otherwise we're never going to finish here. The last thing I get quite a bit is about timing the market. And so I would say most people, right, they have this dream that you're going to buy Bitcoin at the absolute bottom and you're going to sell it at the top, and you're going to look at every chart, you're going to look at all the Doji Death Stars and all the SMAs and all the other things that people are telling you about on Twitter all the time. They're like, I've got the best chart. You got to follow my advice. I'm never wrong. And they're always wrong, which is kind of crazy, because they never tell you about all the times that they have been wrong. There's like that one time that they were right. And there's that saying about the broken clock is right twice a day, right? And so at some point, somebody with a chart is going to be right. But I would not rely on that chart to make decisions about Bitcoin. So for instance, if we think about the last cycle, everyone thought that Bitcoin was going to go way higher, right? We all had laser eyes on. We were ready for 100K. We were ready for 200K, right? And we tapped out at almost 70K. And so if you were waiting for that 200K to sell, right, you never got there. And then if you were waiting for a bottom, I've heard people saying when the bottom was coming in that they were waiting for it to actually go under 10K, right? You would have missed buying and you would have missed selling. And so I think the thing to consider is that you not only have to be right on entry, but you have to be right on exit, and then you have to be right on entry again. And so that's 3 points of data. And so if most people are wrong all of the time, right, getting all 3 right, batting 1,000, right, is going to be really, really difficult. In which case, for most people, what's going to make sense is just dollar cost averaging. Or if you've got a lump sum and you're just getting into Bitcoin, you've been, you know, consistently saving in fiat, and you're ready to allocate to Bitcoin, you just take it and move it and don't even think about it, right? Because this is long-term savings. This is not something you're using to go buy a car in 6 months. This is multi-generational wealth that you're talking about. You're trying to pass this on to your kids and their kids and so forth. Or maybe you have really big charitable goals. Or maybe you want to use it for something political in your future, right? But all of this stuff is not imminent. All of this stuff is long-term savings, in which case either dollar cost averaging as you're getting money in through income is going to make sense, or just taking that lump sum and putting it in is going to make the most sense. The thing about dollar cost averaging versus lump sum is this. So the more volatile an asset is, like Bitcoin, the harder it is actually to time. People generally think that because something is more volatile, it gives them more entry points and it'll make it easier for them to be able to get in and exit. And what actually the data has shown is that it's more difficult, because you need to be more right than the average person with something moving a little bit more slowly. And so dollar cost averaging in a volatile asset actually works really, really well, because yeah, you're going to top tick every now and then when you get your paycheck, but you're also going to bottom tick as well, and you're not going to be timing it at all. It's just going to be based on when you get paid. And so for most people, dollar cost averaging is going to work out really well. I would say if you are somebody who gets paid kind of irregularly, so people who get paid in commissions, I think of like real estate people, or anyone who's just on a sales type of a job, or let's say you get like a quarterly lump sum payment or something like that, then yeah, then you're going to want to move in a lump sum direction rather than dollar cost averaging. Can I take questions or no? Okay, that's fine, because I have one in the back here. Okay, question. What do I think about a speculative attack? Okay, so my husband actually wrote that article about speculative attacks. I was actually hoping to get to this. I think that if you're going to borrow against your Bitcoin, or if you're going to do any kind of borrowing in general, where you're cash out refinancing, or you're doing these strategies where you're taking on debt to go buy Bitcoin, you should be doing it only if you're in a situation where you actually had some sort of cash flow mismatch, where you messed up. You bought too much Bitcoin, or you spent too much, you weren't supposed to do that, and now you have to pay taxes by April 15th. That's the appropriate time to take a loan. The appropriate time, the most inappropriate time to take a loan, I think, is for your long-term savings. The last thing that you want to do is something called over-allocation. Over-allocation is when you lever up, you buy too much Bitcoin, you end up in this 100% allocation bucket unnecessarily because you think that you need to have more Bitcoin than you actually do. You really need to case-by-case evaluate your situation, make money, spend less than you make, have a difference, right? And then be allocating that to Bitcoin rather than trying to do these speculative attack type scenarios or borrowing against your Bitcoin or levering up in any kind of way. I think I'm out of time. So thank you all for showing up. And I hope you have a great rest of your conference.
Oh, hi. Do you have your ticket to the next Pacific Bitcoin Festival? Join us as we shine a light on the best of Bitcoin and Bitcoiners. Visit pacificbitcoin.com for the best deal on tickets now.